Hey there, welcome back. So today I'd like to walk through turning on customer prepayments in your QuickBooks Desktop, how to get the payment into your system, then apply it to a customer shipment. A prepayment occurs when a customer pays for any good or service in advance that is going to be delivered at a later date. The reason why handling prepayments is super important is because it's going to ensure that your financial records stay accurate and we're reporting in basically a clear, transparent manner. Essentially, the risk with any customer prepayment is that you are going to recognize revenue before you've actually earned it. When you get a customer prepayment, it's a liability, not a sale. Basically, that has to sit as a liability on your balance sheet until you actually fulfill the obligation to the customer. So that's something like shipping the product, fulfilling whatever that contract need was. That's the point when that liability flips to earned revenue. All right, let's first start with turning on the customer prepayment function in QuickBooks Desktop. The first thing we're going to have to do is go into single user mode because this is going to be a preference we're going to have to turn on. So you're going to first go to File, and if it says switch to single user mode, you're going to select it. If it says switch to multi-user mode, that means you're already in single user mode. If there are any users in the system, you essentially are going to have to go ask them either to get out or manually kick them out. All right, so we can see here that we are now in single user mode. So we'll select OK and let our system load everything back up. So first we're going to have to go to Edit, then Preferences. Then you're going to select Payments. Then you're going to select Company Preferences. This prepayment box is where we are going to be able to turn on our prepayment requirements in the system. The system auto defaults to not accepting prepayments until you turn this functionality on. So we're going to select Prepayment Settings, and we're going to say, yes, turn on prepayments. So you need to have a liability account to record your customer deposits to. So if you don't have one already made, what you're going to do is go to Add New, and we're going to do Customer Deposits. You ideally would like to use Other Current Liability. Other Current Liability is used for basically any liability that will be fulfilled in the next year. Typically with a prepayment, you're going to get that service out to that customer the next year. But what it will do is create a liability on your balance sheet whenever you get a customer prepayment that will balance to the amount of cash received for that prepayment. You know what I mean? Like essentially, if a customer gives you $100 as a prepayment, the debit side of the entry will be the bank account and the credit side of the entry will be this other current liability. So we'll use other current liability. I'm naming it customer deposits, and I'll make a quick description of prepayments from customers in case somebody else wants to see it or understand what this account is used for. So then we'll hit save and close. Perfect, it's on, and then we'll select OK. So just like that, we turned on our ability to turn on prepayments in our system. Pretty easy. So then you'll select OK. And it's going to have to close all this windows because essentially it's resetting your system preferences. So it's basically soft resetting QuickBooks for lack of a better term. All right. So the first thing you're going to need in your system is a sales order to be able to receive the prepayment against, right? You need basically what is that binding contract between you and your customer? The thing that you're giving them that says, hey, 100% down payment or whatever it should be. So let's make a sales order real quick. We're going to go to sales order. I'm going to make it for Facebook. They're going to get a computer chip and they want 10 of them. And we'll do a fake PO number. So we're going to hit save. So now from this screen, what we can do is hit receive payments. So it popped up with our receive payment screen, but if you notice, it looks different than it used to, right? Because now we have a prepayment here and we have a checkbox of this is a prepayment on a sales order. So you can use either sales orders or estimates. I highly recommend sales orders because that's really the thing that you use for order confirmations between you and your customer, right? It's you confirming their purchase order. It really should be your source binding contract in QuickBooks. So now at this original sales order, we can see that the new payment transaction has been linked to it. So if we click recent transactions, we can see here's the original sales order and here's the $500 customer deposit liability that we just recorded. Now, let's take a look at the accounting transactions that happen in the background when we created or when we received, right, this customer deposit. So where you're going to see this is on your balance sheet. So we're going to go to our balance sheet standard. And what we can see pretty clearly is here's our customer deposit, the $500 that came in, that's offset to our undeposited funds account, right? Once we deposit it to our bank account, the bank account will increase by the 500 and this will be zeroed out. But essentially, this is what is holding that cash until we earn the revenue, for lack of a better term. So now let's ship this product, right? Let's say we got all of these out. So we're going to create an invoice. We're going to do it for the entirety of this sales order. It'll work all the same regardless. And we're going to say that it went out tomorrow. And then we will hit save and close. So it then popped up with this customer has available credits to be applied to this invoice. Do we want to apply it? Yes, we do. Right? We know that we're applying the full customer prepayment. So we can see here it's already selected. It's in the available prepayment section, right? So all of your prepayments will be here, and then your open credits would be here. A prepayment and a credit, right, act differently in terms of how your accounting works. So QuickBooks easily separates them out. So if it's not already selected, you select it, and then the amount to use. We're going to use the entire 500. So then we'll select done. And look at that. If we look back at that invoice, it is fully paid. Now let's take a look back at our balance sheet. Well, if we look now, let's take a look back at our balance sheet. What happened to it? Well, now we can see that deposit liability went away. We still have the $500 in undeposited funds. Okay, but where'd that $500 go, right? It shouldn't be on our balance sheet. It should actually be sitting on our income statement because we have now earned the revenue. And look at that. The $500 sale income is reported right there. And then that's the cost of goods sold associated with that transaction. So your next question is probably, okay, well, where can I see the accounting transaction that was essentially generated to move this $500 over from the customer deposit liability to the sales account? Well, what QuickBooks does, if you go to company and then make a journal entry, there it is. So if you see here, it automatically made your journal entry for you and journaled the customer deposits out of your account for prepayment transfer. Essentially, QuickBooks creates this, call it a baby clearing account, to move your customer liability to your sales account, but this is the thing that's driving it to move to your sales account, essentially zeroing out your customer deposits. So that's the first way that you can do customer prepayments in QuickBooks. It will give you correct financials, essentially articulating, you know, your liabilities versus so that's the first way that you can go through and do customer prepayments. There is another way to do customer prepayments that's pretty similar, but it might be more conducive to the way that your business runs. So the first thing you'll need is either a quote, an estimate, or a sales order. Again, I always use sales orders. So I am going to take a copy of this just so I don't have to make another one. We're going to date it for yesterday, and we'll say they ordered 7 this time. So instead of receiving the payments here, where you can go is right to the receive payment screen. Let's say you have the check in hand, and then type Facebook or whoever your customer is, And at this screen, instead of doing a customer payment, you are going to do this is a prepayment on a sales order. It's then going to give you all of your open sales orders without prepayments. So we're going to say that, you know what, they actually only gave us half of the down payment. They'll go through. It was an ACH. And then I'm going to say apply it here. So now I have basically 50% down on this sales order, which might be my terms. So then I'll hit save and close. So now if we will quickly peek back at our balance sheet, and we'll do it for yesterday, there's our liability for the $175 that Facebook prepaid us, and there it is offset to our undeposited funds. Okay, let's ship the product. So we will go to, I'm going to go straight to the sales order because that's just what I prefer. We will create an invoice. Obviously an invoice and a packing slip are actually the exact same thing. Your packing slip just doesn't have the total dollars. That's really the only difference. But in terms of the way your accounting is going to flow in QuickBooks, invoice and packing slip are driving when sales is recognized. So it looks good. Yep, we shipped the full thing. So I'm going to hit save. So right now, you know what? I'm not going to apply the credit. I'm going to show you the other way that you can do it. So we'll select no. So now, you know what? We're going to say, okay, I'm going to apply the customer deposit and I'm going to apply the 50% they owe me after I've shipped the product per our terms. So we'll go to receive payments. We'll type Facebook. And then we're first going to say, I received $175 because that's how much cash I actually have in hand from the customer. So then we're going to apply credits of that $175, right? This is that down payment that we just recorded. So then we can see the credits apply to $175, and then this payment of $175 is from the payment amount that I received, which then balances to the total amount due. So then we'll hit save and close. So now let's follow our customer deposit liabilities. So I'm in our balance sheet. I'm going to click in, and let's open this up. So we can see here were our two original prepayments, the one we just did, and then the first example that we went through. And then here is us applying the payments for income that we had earned, which is then ending our balance at a $0 customer deposit liability. So we can see that we had $675 worth of customer deposit liability at some point on our books that we have earned. That then is going to balance against, if we bring the dates forward, in our undeposited funds. So if we open this up, what we'll see is here's our two customer deposits that came in, right? We can see the split. And then the second half of the payment owed from the customer at the point that we ship the item, which is giving us our undeposited funds of the $850. So the thing that should then match this account is we can check our profit and loss for the associated income earned. So we just got to open our date range. And look at that, that 850 balances with that undeposited funds, or really what it would balance with in your set of books is your bank account, right? The cash that flowed in ultimately. So then with this at the end of the month, this is going to become a reconciling account for you. What you'll do is you'll go to Reconcile and you will go to customer deposits. So you would have gone through and basically reviewed all your income earned through either a schedule or whatever supporting documentation that you have, and that would be your ending balance in the account. So at the end of February, I'm saying that I should have no customer deposit liability, right? I've earned all of it. So I would go in, hit continue. And then here I would go through and clear out things with my supporting schedules, right? You might have a construction schedule or something along those lines, or you might have, right, a project manager giving you, hey, here's all the work that we completed, whatever it should be. And you would use this ultimately to get to your correct ending liability balance at the end of the month. So that is how basically the two methods that you can go through to record prepayments into your QuickBooks and kind of how the accounting should flow in the background, more just for your general knowledge. It's something that's super useful, especially in these times of tight capital when everybody is trying to hold on to cash. Prepayments is a really good way to be able to kind of hold that leverage with customers and or avoid it with vendors. Using this, you'll be able to accurately reflect your liabilities and your true earned revenue. If you have any questions, please feel free to comment below. But that's all for today. Bye, guys.